Tom Lee just talked about Ethereum overtaking Bitcoin. He talks about why the US government has turned so pro-crypto in general. He gives some price estimates and targets for where Bitcoin and Ethereum could go. I want to react to this. I'll try to show mostly the video and not try to talk too much, pause it too much. But yeah, it is interesting. This is coming from Fundstrat's channel, so still a newer channel of theirs. Not a lot of people watch it quite yet, but it's growing quickly. I think their last video had like 230,000 views, and yeah, they just have a couple videos on the channel. So I'll play it for you. I'll give you some of my thoughts. If you do want to trade crypto, now's a great time to trade crypto because we have pulled back. This is one of my favorite times to trade, is when we've already had a 15% pullback, because we have significant lines of support recently. They're only a few $1,000s away. So even right now, if you did a 10x on Bitcoin, you'd have a lot of cushion. We'd have to go under $100,000 Bitcoin, for example. These are the types of pullbacks that I like to get in on. And now on BYDFi, there's a nearly $30,000 prize pool that you can get access to just for trading on the platform. We constantly run different trading competitions and giveaways. BLOFIN also has some bonuses going on right now where you can get lower trading fees and you can get extra bonuses for depositing and trading. And BTCC just updated this page as well, a 10% bonus on first time deposits. So check this out underneath the video. I really appreciate it, and let's get into it.
Before we get to Ethereum, what is the simple bull case for Bitcoin when we're already at 111,000 price at the moment?
Well, Bitcoin has done very well over any 10-year period. And at $100,000 today, it does reflect that institutions are beginning to view this as a legitimate way to store value. Because the Bitcoin blockchain is really one of the best ways to record financial transactions with 100% never failed censorship resistance, never fraudulent entry in its entire operation. So, but institutions, only about 5% actually own any Bitcoin, but 95% of Bitcoin has already been mined. It's a fixed supply. That's a stat from Bitwise. But that 5% that isn't held yet, because the other Bitcoin is basically being hodled, it has to be acquired by those 95% of institution.
Keep in mind too that the price has also gone up. So it's not like the market's just absorbed 95% and Bitcoin's at the same price and we're betting they'll go up because there's increasing demand. No, Bitcoin's price has gone up at 50% a year. Even over the last 4 or 5 years, it's gone up that much, even when it's been a relatively large market cap. So we're at multi-trillions of dollars right now, growing at 50% a year, and 95% of the supply has come out. 5% is going to come out over the next 115 years. And there's more demand than ever because there are more institutions and more hedge funds, more pensions, more government entities that are approving Bitcoin and Bitcoin ETFs and Bitcoin treasury companies every single day.
Plus now governments want to own Bitcoin as a strategic reserve. So if you think about how difficult it is going to be to acquire that last 5%, I can see why it would replace gold or equal the network value of gold, which is over 22 trillion, and that would put Bitcoin at around 1.2 million per Bitcoin.
Because the network value of Bitcoin today, I mean, people sometimes use the phrase market cap, but so the total value of all Bitcoin out there is what, 2 trillion. Talk me through, I mean, obviously the limited supply argument, I think pretty much everyone gets in a sort of fiat currency world. In the short term, if the president continues to interfere with the Fed, is that a short-term catalyst, or are these strategic long-term arguments for Bitcoin what really matters?
It's in the short term, it's probably unclear if it helps or hurts Bitcoin, because Bitcoin also is correlated with global monetary liquidity. Raoul Pal at Real Vision put up this chart years ago that shows M2 versus Bitcoin, and it's been almost dead on at all the bottoms and tops. Once we would be through Fed interference and the Fed is easing, of course, that's good for Bitcoin. But in this period of risk off, I would say it would hurt stocks and Bitcoin.
What is the case for Ethereum then over Bitcoin?
Well, Ethereum differs from Bitcoin. Actually, Ethereum was initially a fork of Bitcoin, by the way, but with an added feature, which is smart contracts. So what they wanted to do on Ethereum was to say, let's use blockchain technology not just to store value, but now to store information. Ethereum is as a smart contract platform actually also has something called the EVM, Ethereum Virtual Machine. So you can run entire programs and conditional contracts on Ethereum. And Ethereum itself is 100% reliable. It has not had a single moment of downtime since inception.
I've heard of some people describe Ethereum as a cryptocurrency for optimists and Bitcoin for a cryptocurrency for pessimists. Basically saying if you think the government's going to continue to make stupid decisions, you buy Bitcoin. If you think cryptocurrency is going to grow and flourish and there are going to be more and more applications on the blockchain, you buy Ethereum.
One of the few blockchains that has never been down. And then if you needed to do more things on Ethereum, you can build what they call layer 2s on top of it. So Ethereum is essentially infrastructure that now is catching the attention of two industries. The first is the financial sector. The stable coins became really a breakaway product for crypto. And that's like the ChatGPT moment. There's $250 billion worth of stable coins. The vast majority of those are minted on Ethereum. Then the Genius Act was passed by this administration and this Congress, and that greenlighted the proliferation of stablecoins onto the blockchain. So banks are now building stablecoin products. That Treasury Secretary Bessent thinks that could get to $4 trillion. That's exponential growth, burning gas on Ethereum. And then we have Project Crypto, which is the SEC wanting Wall Street to build on the blockchain. Now, all of that collectively, from a Wall Street perspective, is like 1971 for the dollar. And what I mean by that is, in 1971, the dollar went off the gold standard. So in 1971, the dollar became synthetic. And gold was what people bought as a hedge against that synthetic dollar. So you had gold as the trade, and that would be the Bitcoin equivalent. But actually, the synthetic dollar is what created the rails for Wall Street to build all their future products. The futures, curves, derivatives were all because the dollar was a synthetic product. If the dollar was backed by gold, Wall Street would be still a very small business. Well, Wall Street now is going to be building its entire infrastructure onto the blockchain. And the blockchain they're choosing is Ethereum. So this is the 1971 moment where Wall Street is essentially capitalizing on tokenizing the entire world onto a blockchain. That's a huge opportunity. The second story arc benefiting Ethereum, though, is AI, because now we're moving towards an agentic AI world, but with real products. Like AI is principally been trained on like internet and, social media, but it hasn't been in the real world because it hasn't ingested us as we've moved and physically moved or even had independent products. That's a vast amount of new information for AI models to ingest and store. But then now you have to be sure that all the instructions being sent back to the robot are proof of the originator. In other words, you need a token. I mean, LLMs use tokens anyways, but now you need like a token that interacts across chains. And that's where AI is going to build on Ethereum, because you essentially need what they call proof of human. Mm-hmm. We need to prove that this lawnmower got a real instruction from another chain or another vendor. And so that is all being built on Ethereum.
And
I think that Bitcoin also will benefit a lot from AI because there's going to be so much more abundance in general, and it'll be much easier to, for example, build houses. It'll be much easier to extract resources. So everything is going to be easier to build, right? Real estate is going to be much cheaper to build in my mind, or maybe stay the same because of the increasing, commodity costs, but decrease of labor because of all these different robots, to the point where it might not make quite as much sense to invest in real estate And there's all this productivity in the world. There's all this money sloshing around. It's got to find a hard asset, and a lot of that money might flow from real estate into something like Bitcoin.
Just to state the obvious again for our listeners, clearly Tom has an interest in Ethereum. You think it could grow in value, in total network value, more than Bitcoin, which is, as we've said, at the top $2.2 trillion of Bitcoin at the moment. I think I'm right in saying Ethereum's about 480 billion today.
That's right. This is not going to be a popular statement because there's a lot of tribalism in crypto. But before this year, I would have considered Ethereum like a really good, reliable chain, but without any products being built on it, it shouldn't really do well. But because of what's happening with AI and with Wall Street and, Project Crypto, I think Ethereum's essentially the value of its protocol layer, like, Union Square Ventures calls it the FAT protocol, is now going to be more valuable because we're tokenizing everything on Ethereum rather than just gold. Like, so if gold is a $21 trillion market, tokenizing the real world is orders of magnitude larger than gold, which means Ethereum probably will flip in network value versus Bitcoin.
Flip as in outgrow.
Yeah, it'll have a higher network value.
So he just said that Ethereum will be probably worth more than Bitcoin, but he also talked about gold in there. That'd be worth more than gold. That's about a 50x from here. A 50x for Ethereum would put around $200,000, $250,000.
That argument for Ethereum is really interesting to me because one of my pushbacks was going to be, it still will be, but you've kind of half answered it, is when you look at the idea that crypto is an alternative to fiat currency, obviously one of the arguments is there's limited supply. Totally get that. As you said, Bitcoin supplies already nearly been fully mined. But one of the arguments I always think of back to that is, but there's quite a few different cryptocurrencies. And what's to stop someone founding a new cryptocurrency? And here's Tom, who I really trust in some of these future-looking things, flipping his allegiance, maybe it's not quite the word, from one to the next one. And that surely is a pushback to the argument that these are great alternatives to otherwise fiat currencies who have an unlimited supply.
Yes, I understand that. I think that the distinction I make is that I'm not bearish on Bitcoin because I think Bitcoin will get to 1 million.
But what about all the other cryptocurrencies?
Well, other cryptocurrencies don't have the network value because otherwise they're just software chains, meaning...
So you don't really believe in Ethereum as a currency. You believe in it for other reasons.
That's right. I think that the narrative of storing value is really Bitcoin's use case. Ethereum's use case is that it's actually going to be used and burned. So Ethereum gets consumed through gas fees, and then staking is how you produce an Ethereum. That inflation rate has been below Bitcoin, actually. So if you look at it as monetary supply, Bitcoin's monetary supply is actually still growing faster than Ethereum.
So let's just touch on, because you said the Genius Act, obviously the way in which this new administration has embraced crypto. One of the reasons why, and we mentioned Jamie Dimon in the last episode, I think a lot of those people were bearish crypto 4 or 5 years ago when I was on CNBC every day, and certainly why I was bearish on it then was there's no way any government's going to allow this to grow significantly because they need to be able to monetize their debts. They need to be able to control things like this and the US and the dollar in particular. So how big of a turning point was that this administration has, whatever the details of the act, they've embraced crypto? Mm-hmm. And was it foolish for the United States to do that? And will the dollar's status diminish as a result?
Yeah, if I could give a little historical perspective. When Tether created the first dollar stablecoin, and they built it on Ethereum, their idea was someone doesn't always want to be long Bitcoin or another crypto. They want to be long something stable. And crypto holders weren't really allowed banking access. So they didn't have an off-ramp. So Tether built a dollar-backed coin called a stablecoin, USDT. Mm-hmm. In 2017, Google and the UT Austin wrote these papers claiming Tether was just a fraud. And the only reason crypto went up was because of Tether creations. Okay, so in other words, it was immediately tried to be viewed as something fake. But then Tether has since grown, and of course stablecoins have really grown in popularity. Merchants outside the US love stablecoins because they don't suffer the chargebacks. You know, credit card companies merchants eat fraudulent transactions. So merchants, they get paid, it's just as good as getting $1. In Turkey and a place like India, Tether trades at a premium to the dollar because people prefer to get that over cash because it's hard to get robbed. You know, you can use a stable coin to buy real estate in Dubai now using Tether, like $100 million transactions. So it's actually being used in the real world. Actually, stablecoin usage, 80% is outside the US. But the reason the US administration starts to like it is, number one, crypto is essentially 100% quoted in dollars. In GDP terms, the dollar is 27% of global economy. It's 55% of central bank reserves is the dollar. It's 80% of traditional financial market pair quotes. So the synthetic dollar, which happened in 1971, made the dollar 80% dominant. In the crypto world, the dollar is 100% dominant. So the US wants us to financialize into crypto because everybody prefers to get $1. Collectively, the stablecoin industry is about $280 billion of outstanding dollars. They are now the 12th largest holder of treasuries in the world. Japan owns 1.2 trillion of treasuries. Treasury Secretary Besant thinks this market will get to 4 trillion. That would make stablecoins the largest holder of treasuries in the world. So it'll be stopping the entire treasury market soon.
And allows him obviously to issue more T-bills and try and keep lower rates down and less supply, I guess, of longer rates. But that's another conversation. And always a pleasure, Tom, to catch up. I love the first conversation. I love this crypto conversation, and people can subscribe to.
Now, I know that not all of that was super interesting. Bitcoin's going to this level, Ethereum's going to this level. Some of it was, but I think that gives a better idea for the background on why the government's turning more pro-crypto and why this is kind of a transformational time. I was actually just meeting with someone that has gone from traditional assets to being very heavy in crypto. And I think more and more people are going to view crypto this way as like a real contender for your stored energy and your stored value as time goes on, as it is one of the only things that can't be devalued, Bitcoin, that is, or inflated away, right, by some bad actors. Let me know your thoughts on this underneath the video. Again, if you want to trade, there are links to BTCC, there are links to BYDeFi and also BLOFIN. All of them have special bonuses going on right now. I think BitUNix had a 20% deposit bonus as well. So check those out underneath the video. I think now is a great time to trade, and I'll see you in the next one. Bye.